Ever wonder why you keep losing trades no matter how hard you try? The real deal isn't the market, it's your emotions quietly wrecking your game. And today, we're spilling the secret behind every loss. In this video, we're going to break down exactly how fear, greed, and overconfidence sneak into your trades and mess up your profits. I'm going to show you why most traders keep making the same mistakes over and over, and more importantly, how you can catch this trap before it crushes your account. Stick around because by the end, you'll see trading in a totally new way, and trust me, this one trick could change everything. Alright, so here's the real talk. Most traders out there, they're straight up sabotaging themselves, and they don't even realize it. It's not that the market's out to get them, or that they picked the wrong stock or crypto. Nah, it's way sneakier than that. The real culprit is their own brain playing tricks on them. You see, trading isn't just about charts and numbers, it's a mental game. And if your mind ain't in check, your account is gonna pay the price. Think about it. You're sitting there, eyes glued to your screen, heart racing because the price is bouncing all over the place. Your gut screaming buy, 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 or sell, sell, sell. And that right there, that's the exact moment most traders make moves that blow up their accounts. Fear, greed, overconfidence, they're like these invisible hands controlling your trades, and most people don't even notice until it's too late. It's wild how simple it sounds when you say it out loud, but the truth is, controlling your emotions is way harder than reading a chart. And here's the kicker. These mistakes aren't just one-offs, they compound. One bad trade feeds your ego, the next feeds your fear, and suddenly you're stuck in this loop where you're chasing losses, overtrading, and basically putting your money on autopilot for your emotions to wreck. Beginners fall for it, sure, but even seasoned traders get caught in this trap. You'd think experience would protect you, but when greed or fear kicks in, it doesn't matter how many years you've been at it. The game suddenly flips, and you're making moves you'll regret later. The psychology behind repeated losses is kind of brutal if you break it down. Let's say you lost a trade last week. A normal, disciplined trader would review it, figure out what went wrong, and move on. But most traders, they carry that loss in their head like a weight, and their next trade is all about trying to get even. That's how emotions sneak in. Every decision becomes less about strategy and more about feelings, about ego, about proving something to yourself. And that's a dangerous place to be when real money's on the line. Greed's another sneaky one. Maybe you hit a small win, and suddenly you're thinking, all right, I'm on fire, let's double down. That excitement, that's literally your brain lying to you, telling you that you're smarter than the market today. And yes, sometimes you hit a home run, but more often than not, you're just setting yourself up for a painful reality check. Then there's fear, the flip side of greed. Fear will have you exiting trades too early, missing the big moves and leaving profits on the table. And over time, all these little emotional hits pile up, and before you know it, your account's bleeding and your confidence is shot. And this works across all levels. Beginners get structure and confidence. Intermediates stop chasing hype and start being consistent. Even experienced traders stuck in old habits find themselves cutting losses smarter, picking better setups, and staying cooler under pressure. It's like upgrading your mental software so your trading actually works for you instead of against you. Now, here's the exciting part. We've gone from mindset to action, from theory to practice. But trading isn't just about knowing how to act, it's about seeing the benefits of this approach in real life. How it reduces stress, boosts confidence, and actually starts making those trades pay off consistently. And that's exactly what we're diving into next. I'm going to break down all the real results and benefits of adopting this mindset, showing you why it's the ultimate game changer for traders at every level. You'll see why this isn't just theory, it's the difference between losing more than you make and actually trading like a pro. So now that you've seen how to apply this pro mindset in real trades, let's talk about why it's actually worth it. I mean, you might be thinking, okay, mindset shift, sounds cool, but what's in it for me? Well, the benefits are huge, both financially and mentally, and they hit traders at every level. First off, the financial side. When you start thinking like a pro, your trades stop being random guesses and start being calculated moves. That consistency alone makes a massive difference. You're no longer blowing accounts on impulsive trades or chasing hype. Instead, you're stacking smaller, predictable wins that add up over time. And here's the kicker. Even if you're a beginner with a small account, this mindset makes compounding your friend. A $100 trade done smartly today is way more powerful than a $500 trade done recklessly. Pros know this. They're not chasing big swings, they're building steady growth, and over weeks, months, and years, that consistency compounds into serious profits. But it's not just about making money, it's about cutting losses smartly. When you're thinking like a pro, losses don't freak you out. You stick to your rules, manage your risk, and walk away knowing it's part of the game. Over time, this means fewer blown accounts, less panic, and more capital staying in your pocket. And let's be real, nothing kills your trading journey faster than emotional losses stacking up. The pro mindset protects you from that trap. Now let's switch gears to the psychological benefits, because this is where a lot of traders don't realize the impact. When you start trading with intention instead of impulse, stress drops like crazy. You're not sweating every tick on the chart or losing sleep over what-ifs. You've got a plan, you're following your rules, and your brain isn't stuck in chaos mode. That mental clarity lets you make better decisions, stay patient, and actually enjoy the process instead of living in a constant panic about gains or losses. Another huge mental win is confidence. Think about it. How many times have you hesitated, jumped in late, or freaked out because you weren't sure about a trade? With the pro mindset, that hesitation vanishes. You know your rules, you trust your plan, and your moves come from strategy, not anxiety. Confidence doesn't just make trading easier, it makes it smarter. Every trade becomes a decision you own fully, not something you're hoping to luck into. The scary part is that this pattern becomes almost subconscious. You start to think that losing is just part of the game, but really, it's the emotional decisions causing the losses. It's not bad luck. It's not timing. It's you reacting to every tick of the market like it's some personal attack. Most traders don't even realize they're making these emotional decisions because they're so used to living in this reactive state. That's why education and strategy alone aren't enough. You can know every pattern in the book, but if your mind's running wild with fear and greed, all that knowledge goes out the window. And that's exactly why understanding this psychology is a game changer. Recognizing how emotions creep into your trades is step one. Step two is figuring out how to stop letting them run the show. Once you get that under control, you start making decisions based on logic, patterns, and strategy, not on gut feelings or panic. That's the difference between a trader who keeps losing and one who consistently wins. Now, here's the part most people miss. Controlling your emotions isn't just about staying calm. It's about setting yourself up to avoid these triggers in the first place. It's about having a plan, sticking to your rules, and learning to watch the market without letting every move tug at your heartstrings. That's what separates the pros from the wannabes. And when you start seeing your trades this way, losses stop feeling like bad luck and start feeling like opportunities to learn, adjust, and grow. So, if you've been struggling, feeling like the market is against you, we're just constantly battling that fear and greed roller coaster, know this: you're not broken, you're just caught in the same trap most traders fall into. And the good news? Once you spot the emotional triggers, you can start building habits to beat them. And that's exactly what we're going to jump into next: how this emotional trap actually sneaks into every trade and what you can do to spot it before it wrecks your account. Stick around, because understanding this is the first step to turning the game around. So now that we've talked about why most traders fail and how emotions quietly wreck your game, let's get to the heart of it, the secret behind every single loss you've ever had. And trust me, once you hear this, it's going to make you look at your past trades in a totally different way. The truth is, almost every loss, whether it's small or massive, comes down to one thing: emotional control. That's right, it's not the stock, the crypto, or the market timing. It's how well or poorly you manage your own feelings when money's on the line. Think about it for a sec. You've probably been there. You're staring at the screen, watching a trade start to move against you, and suddenly your heart starts pounding. Your brain goes into overdrive, and before you know it, you're making decisions that aren't part of your plan. Maybe you exit too early, chase a losing position, or double down on a trade that's already tanking. That's your emotions talking, not your strategy. And here's the kicker. Even small emotional reactions, repeated over time, are like tiny leaks in a boat. At first, you barely notice it, but eventually that boat's gonna sink. That's why professional traders don't rely solely on their instincts. They've built systems to keep emotions in check. Now let's break down the difference between professional traders and impulsive traders, because this is where the light bulb really goes off. Professional traders don't let every tick of the market control their mood. They've got rules, routines, and a mindset that prioritizes long-term consistency over short-term wins. They know that missing a trade or taking a small loss isn't a failure, it's just part of the game. Emotional triggers are expected, but they've got strategies to deal with them. They stick to their plans, follow risk management, and keep their cool even when the market is wild. That's why pros win over time, while others keep spinning their wheels. Impulsive traders, on the other hand, are the ones living in the moment. They feel the highs of a winning streak and the lows of a losing streak so intensely that their decisions get hijacked by their emotions. Greed makes them chase the next trade, fear makes them panic, exit positions, and overconfidence tricks them into thinking they can predict the market every time. It's a roller coaster that's fun in theory, but brutal for their account. And the sad truth is, these impulsive moves are what create patterns of repeated losses. The market doesn't care about your feelings, but your emotions care a lot about the market, and that's where the trap is. Here's another layer to it. Emotional control isn't just about staying calm, it's about awareness. You've got to be able to recognize the triggers before they take over. Maybe it's seeing a trade go against you, maybe it's losing a few trades in a row, maybe it's even the pressure of wanting to make up for yesterday's losses. Whatever it is, professional traders train themselves to catch these triggers in real time. They step back, assess the situation, and make a choice based on logic, not panic. That's why they don't just react, they respond. And here's the part that's super important. Emotional control isn't something you either have or you don't. It's a skill. And like any skill, it takes practice. You can start small, set strict entry and exit rules, use stop-loss orders, journal your trades, or even take short mental breaks during intense sessions. Over time, these habits train your brain to respond calmly under pressure, turning what used to be emotional chaos into disciplined action. That's the real secret behind every consistent trader's wins. They've mastered themselves before trying to master the market. But let's get real for a second. This isn't just about avoiding losses. Emotional control gives you freedom. It stops you from chasing trades you shouldn't. It stops you from letting fear dictate your moves. And it stops you from letting greed make reckless bets. You start seeing opportunities clearly, making decisions that actually make sense, and over time your results speak for themselves. And this doesn't just apply to beginners or intermediate traders. Even the veterans who've been grinding for years hit emotional walls, except the pros know how to navigate them without letting the market or their feelings wreck their plan. So when you hear the secret behind every loss, it's not some trick chart pattern or magic indicator. It's all about you and your ability to keep your emotions in check. Lose the panic, lose the greed, lose the overconfidence, and suddenly you're no longer a victim of the market. You're playing the game on your own terms. That's why professional traders consistently outperform impulsive ones. They've put the work in to understand their minds, not just the market. And here's where it gets even more exciting. Once you start seeing how your emotions drive losses, you can start flipping the script. You can build habits, routines, and systems to stay in control, which sets you up perfectly for the next step, identifying emotional triggers in real time and using practical techniques to master them. Stick around, because in the next section, we're going to show exactly how to spot these triggers before they wreck your trades and how to turn emotional awareness into your biggest edge. Alright, so by now, you've seen why most traders fail and why emotional control is the secret behind every loss. But knowing the problem isn't enough. You've got to be able to spot it in the wild, in real time, before it wrecks your trades. That's where identifying emotional triggers comes into play. The truth is, emotions are sneaky. They don't always show up with flashing neon signs saying, "Hey, I'm about to mess up your trade." Sometimes it's subtle, a tightness in your chest, a racing heart, or that little voice in your head pushing you to click buy or sell without thinking. The sooner you recognize these triggers, the sooner you can take control. Most traders never actually pause to notice how they feel during a trade, and that's a huge mistake. Fear and greed don't just happen, they're reactions to certain situations. Maybe it's seeing a trade dip slightly and feeling panic creeping in. Or maybe it's hitting a winning streak and suddenly your brain is whispering, "You're on fire, double down." These are emotional triggers, and they'll hijack your decisions if you're not paying attention. A big part of trading successfully is learning to watch these triggers without letting them run the show. So how do you actually spot them? Start by being aware of your body and your mind. Your emotions manifest physically. Your hands might shake, your chest might tighten, your stomach could churn. Your mind might race with thoughts like, "I can't afford to lose this one," or "I need to make back what I lost yesterday." When you notice these signals, it's a red flag that your decisions might be influenced more by feelings than strategy. And here's the thing, everyone gets these signals. Beginners, veterans, full-time traders, it doesn't matter. What separates successful traders is that they notice it and act intentionally instead of reacting. Another tip is journaling. It might sound basic, but tracking your trades alongside your emotional state is a game changer. Write down what you felt before entering a trade, what triggered those feelings, and what decisions you made. Over time, patterns emerge. Maybe you notice that after a small win, you get greedy and overtrade, or after a loss, you panic and exit too early. These patterns are your triggers talking to you. Once you can name them, you can start building systems to neutralize them. And here's a pro-level insight. Triggers often aren't about the trade itself, they're about your personal psychology. Stress from outside the market, fatigue, even your ego can set off emotional reactions. Maybe you had a rough day at work and suddenly that one red candle makes you freak out. Or maybe your pride is hurt from a previous loss and now your brain is whispering, "You can't let this happen again." Recognizing that your triggers aren't always rational is huge because it allows you to separate your feelings from the actual market situation. Once you know your triggers, the next step is creating a pause between feeling and action. You don't have to act on every emotion instantly. Pros will literally take a deep breath, step back, or even walk away for a moment before making a decision. This small gap is enough to flip the switch from impulsive reactions to intentional choices. That's how you regain control and start making trades that actually follow a plan rather than your mood swings. Here's another actionable tip. Set predefined rules that act as guardrails. For example, decide in advance your entry and exit points, maximum risk per trade, and stop-loss levels. These rules help you catch yourself before an emotional trigger turns into a costly mistake. It's like giving your impulsive side a speed bump. When your brain starts shouting, "Just go for it," your rules step in and say, "Hold up, think first." Over time, this trains your mind to stay calm and disciplined. Also, recognize that emotional triggers can vary depending on market conditions. Fast-moving markets, high volatility, or big news events can all crank up stress levels and test your emotional control. The key is not to avoid these situations, they're part of the game, but to be prepared. Knowing your triggers and having systems in place lets you navigate these moments without letting fear or greed hijack your trades. The cool thing about mastering this is that it doesn't just help your trading, it actually improves how you handle pressure in life, too. Once you can pause, notice your emotions, and respond intentionally, it builds confidence and clarity. You stop feeling like the market's running you, and instead, you start running your trades with a clear mind. And trust me, that clarity is what separates the casual traders from the consistently profitable ones. So now that you know how to identify your emotional triggers and start building habits to manage them, you're setting yourself up for the next level, learning practical techniques to actually master these emotions in real time. In the next section, we're going to dive into step-by-step strategies to control fear, greed, and overconfidence while trading so that your decisions stay sharp, disciplined, and profitable. Stick around because this is where the real game-changing stuff kicks in. Alright, so by now you've learned why most traders fail, how emotional control is the secret behind every loss, and how to spot your emotional triggers before they wreck your trades. But spotting the problem is only half the battle. The real game changer comes from mastering your emotions, actually taking control instead of letting panic, greed, or overconfidence run the show. And don't worry, this isn't some rocket science. These are practical, down-to-earth techniques that anyone, whether you're just starting or have been trading for years, can use to stay sharp and disciplined. First up, let's talk about journaling. Yeah, I know, it might sound basic, but trust me, it's powerful. This isn't about writing your life story or how stressed you feel. It's about recording your trades, why you made them, and most importantly, what you were feeling at the time. Did you enter a trade because your plan said so, or because you were chasing a quick win? Were you scared when the price dipped, or overconfident when it shot up? Writing this down forces you to reflect and gives you real insight into your emotional patterns. Over time, you start spotting trends in your behavior, like noticing that after a small win, you're more likely to get greedy and overtrade. Once you see these patterns, you can put steps in place to break them. Next, there's rules-based trading, and this one's a total lifesaver. Emotional control gets way easier when your decisions aren't based on gut reactions, but on clear, predefined rules. For example, you set strict entry and exit points, risk per trade, and stop-loss levels before you even touch the market. When the market moves, you follow the plan, no matter how your brain tries to freak you out. Think of it as giving your impulsive side a speed bump. You're basically saying, "Cool, emotions, I see you, but I'm in charge here." Over time, these rules don't just protect your account, they actually train your brain to stay calm under pressure. Another killer technique is mental pauses. Sounds simple, right? But you'd be surprised how many traders skip this. The idea is to literally take a breath, step back, or even walk away for a second before making a decision, especially when your emotions are running high. Maybe a trade is going against you and your heart starts racing. Instead of clicking sell in panic, you take a few deep breaths, review your plan, and decide calmly. These little pauses give your rational brain a chance to kick in and stop your impulsive side from hijacking the trade. Professionals swear by this. They know that even a few seconds of pause can save thousands of dollars in mistakes. Now let's talk mindset, because mastering your emotions isn't just about techniques, it's about building the right habits. One thing pros do is reframe losses. Instead of seeing a losing trade as failure, they see it as feedback. Every loss teaches you something if you pay attention. Did you get greedy? Did fear make you exit too early? Treating losses like lessons removes the emotional weight and lets you learn without beating yourself up. This mindset shift alone can save you from a lot of emotional chaos. Consistency is also key. You don't master emotions overnight. It takes repeated practice, patience, and discipline. Start small. Maybe apply journaling to just a few trades a week, or enforce your rules strictly on smaller positions. As you see results and your confidence grows, scale it up. This gradual approach trains your emotional resilience without overwhelming you. Think of it like building muscle. Tiny reps every day turn into serious strength over time. Here's another tip that's often overlooked: preparing for triggers before they happen. If you know that a certain market condition spikes your anxiety or excitement, plan ahead. Maybe that means setting tighter stop losses, reducing your position size, or even taking a short break during volatile periods. Preparation doesn't eliminate stress, but it lets you navigate it like a pro instead of getting swept up in the chaos. And don't underestimate the power of self-awareness outside trading hours. Meditation, mindfulness, or even just checking in with yourself before starting a session can prime your mind for calm, disciplined decisions. When your baseline state is calmer, you're less likely to react impulsively to every tick of the market. Emotional control isn't just in the moment, it's about conditioning your whole mindset to handle stress before it even shows up. Finally, remember that mastering emotions is a lifelong process. Even seasoned traders hit emotional walls. The difference is that they recognize it, have systems in place, and don't let it derail their plan. When you consistently practice journaling, rules-based trading, mental pauses, and mindset prep, you start turning emotional chaos into clear, confident decision-making. Suddenly, trades that used to feel like roller coasters become manageable, predictable, and way less stressful. You're no longer gambling with your emotions, you're trading with a plan and a cool head. So, now that you've got these practical techniques in your toolkit, the next step is putting them all together into your daily routine, refining them, and seeing the results compound. And that's exactly what we're going to explore in the next section: key takeaways and mindset shifts that tie everything together, giving you a real edge over impulsive traders. Stick around, because once you integrate all these methods, you'll start seeing trading in a totally new light, and your results will start reflecting that shift. All right, let's wrap this up and really lock in what we've been talking about. Because if you take just one thing away from this video, it's that controlling your emotions is hands down your biggest edge as a trader. Think about it. The market doesn't care about your feelings, your ego, or how much stress you're under. It just moves. But what does make a difference is how you respond to those moves. Every loss you've had, every trade that left you frustrated or panicked, it all comes back to one thing: letting emotions call the shots instead of your strategy. From what we've covered, here's the mental shift that separates the pros from the rest. First, awareness is key. You've got to know when fear, greed, or overconfidence starts creeping in. Those little physical signs, racing thoughts, or gut feelings aren't just normal trading stuff. They're your triggers, and recognizing them is step one. Next, having a system to handle them changes the game. Whether it's journaling, rules-based trading, or taking mental pauses, these aren't just techniques, they're habits that train your brain to respond calmly under pressure. And the magic happens when you combine awareness with a plan. Suddenly, what used to feel chaotic and stressful becomes structured and manageable. Here's another point that can't be stressed enough. Losses aren't failures, they're lessons. Once you stop letting each red candle or losing trade trigger panic or revenge trading, you start learning from every move. You start spotting patterns in your behavior, refining your plan, and building emotional resilience. That's what turns a trader who's constantly spinning their wheels into one who consistently wins over time. And it's not about being perfect, it's about being disciplined, aware, and intentional with every trade. Finally, the mindset shift is massive. Trading isn't just about charts and numbers, it's a mental game. The traders who crush it aren't necessarily the ones with the fanciest indicators or the fastest computers. They're the ones who master themselves first. They've learned to see emotional triggers coming, pause, and make rational decisions even when the market is wild. That's the real edge. That's what separates someone who loses money consistently from someone who grows their account steadily. So, keep this in mind. Awareness, preparation, and discipline aren't just tools, they're your secret weapons. Start noticing your emotions, put simple systems in place, and treat each trade as an opportunity to practice control. Once you do that, you're not just trading the market, you're trading yourself, and that's a whole different level of power. And if you're ready, in the next part, we're going to talk about a simple daily mindset routine that ties all of this together, helping you walk into every trading session confident, focused, and emotionally unshakable. Stick around, because this is the stuff that can truly flip your trading results. Don't just watch this video and forget it. Pick one tip we talked about today. Maybe it's journaling your trades, taking a mental pause before reacting, or sticking to your rules, and try it on your next trade. Seriously, even small steps make a huge difference when it comes to mastering your emotions and taking control of your results. And while you're at it, smash that like button if this video gave you a new perspective, hit subscribe so you don't miss the next pro-level tip, and drop a comment sharing which emotional trap you're going to tackle first. I want to see how you put this into action. And trust me, once you start controlling your emotions, trading starts looking a whole lot different.